Welcome back. Corelogic just announced their latest housing market predictions over the next 12 months. They also provide their forecast for the top 5 markets in which they believe home prices will decrease the most over the next 12 months. I have a lot to share in today's video, so let's go ahead and dive right in. Just posted on July 2nd. Let's first talk about what happened over the previous 12 months, and I'll share their forecast posted 1 year ago to see if they were right or wrong. So home prices nationwide, including distressed home sales, increased year over year by 4.9% in May 24 compared to May of 2023. There's two things I want to touch on regarding this. Is that this is actually very close to the forecast that was posted 1 year ago. Back then, they were forecasting a gain of 4.9%. Now, prices increased by 4.9%. So, hats off to them. Very, very close to their predictions posted 1 year ago. That's number one. Number two, though, this 4.9% increase that we saw over the previous 12 months is actually a slowdown compared to the gain of 5.3% that they posted 1 month ago. So from April last year compared to April this year, we saw a gain in prices up by 5.3%. But now in May, it only increased by 4.9%. So increasing, but not increasing the same rate. So basically a slowdown. Also on a month-to-month basis, home prices grew by 0.6% compared to the previous month. This is also a slowdown as well because from March to April this year, home prices increased by 1.1%. Now we're again at 0.6%. All right, let's now talk about their forecast over the next 12 months. So this is, by the way, based on their HPI or their home price index, which is an index which measures home price changes on a national level. So in any case, they're forecasting for an increase by 3% year over year from May this year through May of 2025. One thing I noted from their forecast posted 1 month ago, this actually is a slowdown as well because 1 month ago, they're forecasting a gain of 3.4% over the next 12 months. Now they're forecasting an increase of 3%. They provide an explanation regarding this, and I'll share that with you guys here in a little bit. But here's a look at their forecast. They're forecasting a gain of 3% year over year and up by 0.7% over the next 1 month. Compared to the current readings, up by 4.9% year over year. So still up, the forecast, but not nearly as high compared to what we're seeing over the previous 12 months right now. Also, according to Corelogic, as has been the case for the past year, the Northeast continued to lead the country for annual appreciation, with New Hampshire the only state to post double-digit increases. Meanwhile, the price growth gap between detached houses and attached houses, these are condos and townhouses versus single-family houses, has actually been widened, likely indicating homebuyer preferences for more personal space to work from home after the height of the pandemic, as well as surging HOA fees due to maintenance costs increasing big time as well. One thing I want to mention regarding this is that not only are we seeing HOA fees increase, but also home insurance rates also gaining ground as well. This is from ResiClubAnalytics.com. So according to S&P Global, the average home insurance premium rate increased for the US for owner-occupied homeowners. Look at this. These gains, looking at pre-pandemic levels, up by about 2.5% to about 3.2%. Then 2021, a gain of 3.8%. Then 2022, basically double that rate, up by 6.2%. Again, these are average home insurance premiums for owner-occupied houses. Then 2023, a giant increase of 11.3%, basically 4 times the rate we saw in 2020. So for example, back in 2021, there was not a single state that had an average insurance premium increase by more than 10%. In 2022, though, that figure climbed to 6 states. And in 2023, it was a staggering 25 states with at least a 10% increase jump in your average insurance premiums. In fact, the state with the biggest increases of home insurance rates in 2023 was Texas, up by a staggering 23.3%. After that, Arizona up by nearly 22%, Utah up by 20%, and we saw double-digit gains for 25 states, which is right here. California was a 25th state, up by 10% year over year. And overall for the nation, we saw insurance premiums increase by 11.3% in 2023, whereas in 2018, a small increase of 3.2%. So basically, before COVID, moving in line with inflation. However, over the past several years or a couple of years, insurance premiums have been absolutely skyrocketing, making, of course, it more challenging to own a house, but also for homeowners or home buyers to buy houses as well. You're looking at your insurance rates increasing, and also for your rate. And of course, we have all-time record highs in home prices on national level as well. So, a lack of housing affordability, to say the least. Going back to Corelogic report, according to their chief economist, she stated the following. While national annual home price growth continues to slow as anticipated due to inventory increasing, of course, because also we have elevated rates as well. This cooling appreciation over the past months is now observed in more markets, as the surge in mortgage rates this spring caused both slowing home buying demand and prices. However, persistently strong home price gains this spring continue in markets where inventory is well below pre-pandemic levels, such as the Northeast. I've explained this in several videos. In the Northeast, we're seeing decreases of inventory of existing houses down by about 50 to nearly 80% compared to pre-COVID levels back in May of 2019. In contrast, other areas like in Texas, Florida, are seeing big gains compared to historical norms. And because of these kind of differences of our housing market, the markets in which they have more inventory compared to pre-COVID levels are seeing the slowing of home price growth, in some markets also down year over year. In contrast, many markets in the Northeast are still experiencing big gains in home prices overall. Also, markets that are relatively more affordable, such as those in the Midwest, have seen healthy price growth this spring. On the other hand, markets with notable inventory increases, such as Florida and Texas, continue to see annual deceleration that is pulling prices below numbers recorded last year. In other words, home prices down compared to the previous year. So for example, according to Redfin posted last week, the markets in which they have experienced decreases overall in their median sold price is Austin, Texas, down by 2.1%, Dallas down by 1.5%, and San Antonio, Texas, down by 0.2%. And overall, for the state as a whole in Texas, they have approximately 2% more existing houses for sale this May compared to May of 2019. All right, going back to Corelogic's report, let's talk about home price changes for each of the states. So this is important to note this because there's not a single state that posted annual home prices decreasing. So every single state, according to Corelogic, at least for May compared to May last year, is up year over year. In fact, here are the states that have posted the biggest increases overall. New Hampshire up by 12%, the only state that has posted a gain up by double digits. Then we have Rhode Island, New Jersey, Connecticut, Wisconsin, Virginia, Illinois, Maine, Ohio, and South Dakota. So much of the Northeast and the Midwest is up year over year. In contrast, look at the report from 12 months ago. There's 12 states that posted declines compared to the previous year back in 2022. Those states were Arizona, California, Colorado, Idaho, Montana, Nevada, New York, Oregon, South Dakota, Utah, Washington State, and DC. So much of the West was experiencing decreases in home prices. As you can see right here, the blue states right here, not to be affiliated with political affiliations, but blue states, they saw a year-over-year change less than 1%. So basically putting the US in half, much of the West was down year over year, whereas much of the South and also the Midwest, as well as parts of the Northeast, were experiencing decreases in prices overall. Also, have a look at this. Here are the change in home prices for the top 10 US metros posted 1 year ago. Again, this is the change in prices from May of 2022 to 2023. So leading the nation 1 year ago was Miami, up by 11.8%, Boston and also Washington, D.C. barely squeaked out a game. In contrast, much of the West was down in the range of 2.5% to about 5.5% in Las Vegas and Phoenix, Arizona. Now look at the map this year though. This is the gain in prices compared to 12 months ago. Miami is up by 8.5%, quite a bit lower than the 11.8% from the previous period. But much of the West is now experiencing big gains, unlike 1 year ago. So for example, San Diego is up by a whopping 9.2%, beating out Miami now. LA up by 5.3%, Las Vegas 7.8%, Phoenix 5%, Denver much less than other metros, a gain of 2.4%. Also Houston up by only 2.1%. Chicago, DC, and Boston up by at least 5% as well. And lastly, here is the top 5 markets in which Corelogic believes home prices will decrease the most over the next 12 months. So number 1, Palm Bay, Melbourne, Florida, a very high probability that prices will decrease. Also after that was Gainesville, Florida, Atlanta, Georgia area, Spokane, Washington, Northport, Sarasota, Florida as well, rounding out the top 5. With that said, thank you so much for joining me in today's video. Like and subscribe. Have an awesome day, and we'll see you in the next video.